I look around the room and I see so many friends and so many people who did inspire me. And I just know, I genuinely appreciate this golden ticket, and I hope to take advantage of it. And I said, it's so good to see so many friends, and this year's award is also to an amicus. That is a friend whose arguments on behalf of the National Risk Retention Association in their amicus brief in the case of the Alliance of Nonprofits for Insurance Risk and Retention Group versus Commissioner Brett Barrett compelled Judge Mann to grant summary judgment to the Alliance. That gentleman unfortunately cannot be here today. It is Skip Myers, Robert H. Myers Jr., and I understand you, Sandy, are going to be accepting the award in his stead. If you don't know Skip, I think you need to get to know him if you care about captives. He's a very dynamic gentleman. He is the managing partner of the law firm Morris, Manning & Martin, LLP. He has also been recognized as one of the world's leading insurance regulatory attorneys. He serves on the board of directors of the NRRA, and he's also general counsel for them. And it was on their behalf that he wrote this amicus brief. Skip's friendship with Nevada actually began in 2000 when the state first implemented its captive laws. He was not, of course, our only friend. Many of you have been there. Skip made his way forward at the first NEIC where I appeared after we became a captive state, and I got to know him pretty well. And he was an enormous teacher to me through the years. When I fast forward to 2005, which was a banner year for Nevada, that is the year of our first conference here in Las Vegas. That is also the year in which we persuaded the Nevada legislature to reduce the fees and the premium taxes that were charged to foreign risk retention groups. There, Skip also wrote an amicus letter, which was very persuasive to the Nevada legislature, which granted our request. It was Skip, along with many of you, Sandy, John, Jim, who taught us that those fees and premium taxes were discriminatory and they were contrary to the Federal Risk Retention Act. Skip continued to endorse Nevada as a viable domicile for RRGs. With the change in 2005, there was an unprecedented move to foreign risk retention groups registering in the state. 2005 was also the year in which the GAO study report came out. The title of that was Common Regulatory Standards and Greater Member Protections Are Needed. Unfortunately, that report led to a great deal of overzealous regulators. For those of you who are regulators in this room, I would like to caution you that unreasonable and unfounded regulation is an infectious disease and it causes death to the insurance marketplace. Throughout these years, Skip had encouraged and continued to endorse Nevada. I want to caution you again because the pendulum does swing. The GAO study in 2011 is caused by what is known as a disarray of the regulatory scene and discriminatory acts and actions by not the captives, not the risk retention groups, but the regulatory states against risk retention groups. I see Skip's hand in the hand of NRRA and the proposed amendment to HR 2126, the Risk Retention Modernization Act of 2011, and that amendment would clarify the provision of the LRRA regarding financial responsibility as a condition of licensure. This association recognizes the importance of a precedence, and we wish the NRRA and certainly the Alliance well in prevailing on the appeal, and we would hope that Skip and the NRRA continue their friendship and be an amicus of Nevada. Would you please convey that message to him, Sandy?
Absolutely.
the cards.
Thank you, Alice.